Thanks for tuning in and welcome to the August portfolio update. I will be going to the companies I bought for this month, dividends received, dividends year over year, and doing a portfolio update in full transparency. This is where I show the amount of the portfolio, all my holdings, performance against the benchmark, and much more. If you like this type of portfolio updates that I do on a monthly basis, where I always show my portfolio in full transparency, whether I'm beating the S&P 500 or not, where I always show all my holdings and so on, consider subscribing and liking this video. Right now, my goal is to reach 2,500 subscribers by the end of this year. I am almost there, so your support is appreciated. With no more additional fluff, let's dive in. For the month of August, I continue building my dividend growth stock portfolio by adding to both core and supporting positions. I purchased 0.73 shares of Microsoft, further increasing my allocation to a company that continues to show strong growth potential and leadership in technology. I also added 0.32 shares of Visa, reinforcing one of my core holdings that I plan to hold long term due to its consistent cash flow growth and dominant position in the payment space. On top of these, I made a smaller but strategic addition of 0.10 shares to automatic data processing to strengthen my exposure to a reliable dividend grower. Also, 0.11 shares of Home Depot, a leader in the home improvement sector, and 0.04 shares of Google, where I took advantage of a small dip to gradually increase my position in this tech giant. Overall, these August investments align with my strategy of steadily building allocation in high quality companies, prioritizing growth holdings while also taking advantage of opportunities to add to other positions at favorable prices. In August, 8 of my companies paid me a dividend, providing a steady stream of passive income that continues to grow month by month. We got Apple $1.22, AbbVie $9.87, Realty Income $5.90, Colgate $4.36, Starbucks $11.18, MasterCard $2.68, Procter & Gamble $3.20, and Texas Instrument $10.54, for a total amount of $48.95. Overall, this month dividend income showcases the benefits of diversification across sectors with contributions from technology, healthcare, consumer staples, real estate, and discretionary. Each payment, big or small, is another step towards building a sustainable income stream on the road to long-term financial freedom. Looking back at my dividend income year over year, it's motivating to see how far the portfolio has come since I started. In 2020, I earned $3.60 in dividends. Barely noticeable, but it was the beginning of building something bigger. By 2021, that figure grew to $13.14, and by 2022, I was already up to $29.81, showing how consistent contributions and reinvesting can accelerate progress. The real breakout year was 2023, when dividends jumped to $53.86, nearly doubling from the year before. In 2024, the income dipped slightly to $49.99, and in 2025, I collected $48.95 so far, which shows that while there can be fluctuations along the way, in this case from selling high yield holdings, the overall trend is still moving upward as I continue to buy high CAGR along the way. We just have to wait for the upcoming years to see the increase. What stands out to me is the long-term compounding effect at work, going from just a few dollars in 2020 to nearly $50 a year. Now, it might not seem huge, but it's still proof that steady investing and focusing on high-quality dividend growers add up. Over time, these small amounts will snowball into something much more meaningful, and that's the power of dividend growth investing. As of now, my portfolio has reached a value of $29,700, putting me right on the edge of across the $30K milestone, a number that felt far away when I started this journey. The portfolio is projected to generate $578 in annual dividends, which comes out of a 2.35% weighted dividend yield across my 21 holdings. What excites me the most is just not the growing dividend income, but also the overall performance of the portfolio. Year to date, my portfolio has returned 10.27% compared to the 9.44% return of the S&P 500. That means I'm currently beating the market, which reinforces the idea that dividend growth investing can provide both income and competitive returns. Reaching nearly 30K with a diversified mix of high quality companies feels like an important checkpoint in the larger goal of building long-term wealth. Each month of contributions and reinvested dividends brings me one step closer to financial independence, and the results so far are a reminder that patience and consistency pays off. My portfolio is built around 21 high quality companies that I believe combine the best of both worlds, a reliable dividend growth and long-term market beating potential. The holdings span across multiple sectors, giving me diversification while still focusing on business with durable competitive advantages. Going clockwise, we got Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, Google, Microsoft, and S&P Global. The result is a well-rounded portfolio of businesses that dominate their industries and continue to compound shareholder value over time. With a 2.35% yield, steady dividend growth, and creating a track record of beating the S&P 500, I feel confident in the balance between income, stability, and performance. This combination of quality and discipline is what makes dividend growth investing such a powerful strategy. One of the most rewarding parts of dividend growth investing is watching the income stream build across different companies in my portfolio. Each of my 21 holdings contribute in its own way, and together they create a well-balanced foundation of passive income. Some of my positions are steady dividend payers that provide stability and consistency, while others are small contributors today but have tremendous room for growth in the future. A few of my largest holdings are already meaningful income generators, reinforcing the idea that holding onto quality businesses over time pays off. What I like most is the balance between sectors. I have exposure to technology, consumer staples, healthcare, real estate, financial, and consumer discretionary, which means my income isn't dependent in just one area of the market. The combination of defensive names that provide stability and growth companies that are compounding fast makes the portfolio both resilient and forward-looking. Every dividend payment, whether big or small, plays a role in fueling the overall compounding effect. Some may not look significant on their own, but when combined, they form a powerful and growing stream of income. This blend of quality holdings and sector diversification is what gives me the confidence that my portfolio can deliver both rising dividends and strong long-term performance. Looking at the total return of my portfolio, I can clearly see the benefits of holding a diversified mix of high-quality businesses. Some of my positions have delivered outstanding gains, showing the power of buying and holding great companies over time. A few names are more modest performers, adding steady growth to the portfolio, while others are still in the red. But that's part of the long-term investing journey. What matters the most to me is the overall picture. My winners more than outweigh my laggards, and the portfolio as a whole continues to compound at a strong pace. Even the positions that are down today represent opportunities, since they allow me to reinvest into quality businesses at lower valuations. The mix of strong growth stocks, consistent dividend payers, and defensive names create a balance that gives me confidence through all types of market conditions. While individual companies may rise or fall in the short term, the combined performance of the portfolio is what matters, and so far, that performance has proven that a disciplined dividend growth approach can compete with and even outperform the market. That will be it for the August portfolio update. If you made it till this part, thank you so much for supporting me as a creator. Don't forget to like and subscribe. Thanks for watching, and I'll see you in the next one.